Wall Street opened a new week on an optimistic note. The market revived to meet positive expectations triggered by the broad-based use of artificial intelligence by high-tech giants. Tesla logged the biggest gains yesterday. Sentiment on Wall Street turned sour on a Tuesday, and the stock indexes pulled back from yesterday's highs, as investors are cautious ahead of the US inflation data. Amid the empty economic calendar on a Monday, investors turned attention to corporate news, which encouraged optimism and growth on the benchmark indexes. Dow Jones grew by 0.25%. The Nasdaq was the best performer as it closed 1.14% up. The S&P500 added 0.67% to close at 4,487 points. The major stock indexes traded in the red in the pre-market. Futures on the stock indexes shed 0.3 and 0.47%. The S&P 500 is expected to trade in the intraday corridor between 4,440 and 4,500 points. The Nasdaq spiked yesterday at the back of the rally in Tesla shares. The electric car manufacturer's stock jumped by 10% after Morgan Stanley upgraded the company's rating from a neutral to overweight. The reassessment was driven by the belief that the supercomputer Dojo could zoom up Tesla's market value by almost $600 billion. The rally of Tesla shares also lifted the shares of the other mega-cap companies. In particular, Amazon leapt by 3.5%, while Microsoft shares rose by 1.1%. Meta shares also jumped by 3.25% after Sunday report indicated that their social media platform is working on a new, more powerful artificial intelligence system. Qualcomm shares surged by 3.9% after the chip manufacturer signed a new agreement with Apple to supply 5G chips at least until 2026. Walt Disney shares grew by 1.2% after reaching an agreement to return Disney programs, including ESPN, to the Spectrum cable service just an hour before the start of Monday's NFL games. Apart from the striking corporate news, a survey from the Federal Reserve Bank of New Zealand showed that Americans' overall views on inflation in August remained largely unchanged, as they predicted increases in housing and food prices, although they anticipated deterioration in personal financial welfare. The market did not react to this data. Meanwhile, according to FedWatch data, traders have slightly increased the odds of the Fed taking a pause in November. The probability now stands at 57%, up from the recent 54%. Out of the 11 sector indexes in the S&P 500, 9 saw an increase, led by consumer goods and communication services. Interestingly, trading volumes on the US exchanges were low on a Monday, and this trend might carry over into Tuesday. While both stock futures and bond yields have slightly decreased ahead before the opening bell, the fact that they are moving in a tandem is notable. Investors are awaiting inflation data for August, which is due tomorrow, and producer price data scheduled for Thursday. The recent surge in oil prices and robust economic data have intensified concerns about persistent inflation, clouding the prospects of the Fed ceasing its monetary tightening. In terms of macroeconomics, the NFIB's small business study for the past months was released today. The survey indicated that U.S. small business sentiment declined last month for the first time since April due to concerns over stubborn inflation and staff shortages. However, these figures are unlikely to make a significant impact on the market. In the corporate sector, mega-cap stocks are pulling back today from the highs reached on November. On Monday. Tesla shares dropped by 0.9% ahead of the opening bell, while other high-cap stocks, including Amazon and Microsoft, fell by 0.6% and 0.7%, respectively. Apple shares increased in the pre-market trading, rising by 0.2% in anticipation of the new iPhone 15 launch. And Meta also managed to maintain a slight increase of 0.2%. Shares of the cloud service provider Oracle plunged by 10.4%, following revenue forecast for the current quarter below target figures. Paramount Global shares added 1% as the main shareholder reached an agreement to restructure debt with its creditors. The US dollar index is regaining its footing against rival currencies. Its index has recovered by 0.24% to trade at 104.80, and the intraday CAD for the index is seen between 104.50 and 105.08. On Monday, the greenback was bruised by a rally of its rival currencies, led by the yen, and today the US dollar index is asserting its strength against after the sharpest one-day fall since July 13. The pound sterling plunged after mixed data on the UK labour market. The British pound dropped by 0.3% as the report showed the signs of a weakness in the labour market in July, despite strong growth in wages. Thus, the report painted an obscure picture ahead of the Bank of England's policy meeting next week. From now on, the market is looking forward to the US inflation data for August, which is due on Wednesday. The US Fed is highly sensitive to inflation data, and the Canadian dollar is gaining ground against its American counterpart, slowly but surely. The USD CAD pay is now trading at a 1.3557, 0.09% down. The intraday CAD for the instrument is seen between 1.3520 and 1.3580. The loonie still finds support from rising oil prices and optimism about OPEC. The cartel confirmed its forecast for steady global oil demand in 2023 and 2024. The forecast rests on the fact that major economies are coping better than expected. Global oil demand is likely to increase by 2.25 million barrels per day in 2024, compared to an increase of 2.44 million barrels per day in 2023, according to the monthly report by OPEC. The report from OPEC suggests the ongoing global economic growth is projected to boost oil demand, especially considering the recovery of tourism, air travel, and steady mobility. Following the report, Brent crude oil prices rose by to $91.64 per barrel, reaching a new high for 2023. And today, Brent increased by another 1.5%, setting a new peak at $92.08. The crypto market is unable to follow a clear-cut trajectory. Today, crypto assets are trading higher. Bitcoin rebounded from its lows and jumped by 4.42%. The token failed to settle above 26,200. Popular altcoins such as Ethereum, Solana, Binance, Ripple, Cardano, and Litecoin are gaining from a 1.7 to 4.1% today. The crypto market plunged yesterday and its overall capitalization shrank below $1 trillion. This slump destroyed almost $29 billion of the market value. Nevertheless, the major crypto assets rebounded from their lows almost instantly. It means that the market is eager to revive bullish sentiment. As for the industry news, Securities and Exchange Commission Chair Gary Gensler again acquitted cryptocurrencies and securities, speaking in front of the Senate Banking Committee. Bitcoin could trade today, trying to settle above 26,000 with a target of $26,350. An alternative scenario is a decline to 25,700. We hope that our video analysis will help you with the prudent trading decisions. Ask any questions and leave your feedback, and see you online tomorrow.